Gary. Thing number one, will 5% Treasury yields disrupt Bitcoin?
So, Rob, last week we talked about Treasury yields. And one of the things that surprised people was when the Federal Reserve started to lower interest rates. They lowered the Fed funds rate in September. And over the course of the next 3 months, they lowered the Fed funds rate a total of 100 basis points, which is 1%. They said the reason they were doing it was to lower borrowing costs for people. And then people were shocked that the yields on the 10-year and longer securities actually went up. Borrowing costs went up. Now, at Deep Knowledge Investing, we were not surprised. We told the Fed, do not lower rates. It's not going to go well. And the bond market, which is made up of pretty smart people, started to price in higher inflation. And we saw yields start to rise. Now, the 10-year yield last week peaked at a little bit over 4.8% and ended the week at 4.6%. And, for whatever reason, the bond market likes round numbers. 3% is kind of a big number, and 5% is a big number for the bond market. And so the concern was, if the yield on the 10-year rose to 5%, it would crash the equity markets, which may happen. And then that would in turn cause a drop in the Bitcoin market. And so there was a lot of debate on Twitter or X about that in the last week.
Gary, with the expectation that if you have the 10-year crossing the 5%, you're looking at negative for the equity markets. With that, we see Bitcoin kind of trade with the NASDAQ as a beta proxy. But Bitcoiners will tell us, hey, we also need to look at why the market drop might come into play here, because we basically have a situation where higher bond yields caused by inflation fears, that could be tailwind for Bitcoin, actually a bullish signal. So what are your thoughts? Seems like there's some mixed thoughts on the analysis that you just laid out.
Yeah, Rob, I think that's exactly it. So you've pointed out both sides, and the question is, wait, which is true? And the answer is, I believe both are true. It depends on the timing. So the person who's done really good analysis on Bitcoin correlations is Lynn Alden. She's somebody that we really respect at Deep Knowledge Investing. And Lynn recently did a study that showed that Bitcoin trading is most closely correlated with global liquidity. But after that, it's also very correlated with the NASDAQ. And when we say it trades as a high beta proxy for the NASDAQ, it's just a fancy way of saying if the NASDAQ falls, Bitcoin falls more. If the NASDAQ goes up, Bitcoin goes up more. So here's what I think is the chain of events. If the 10-year crosses 5%, that is likely to make the market go down. If the market goes down, Bitcoin is likely to fall more in the short term. But the reason this would be happening is because the market would be pricing in higher future inflation. And another way to think about inflation is a reduction in the purchasing power of your dollars. If that's the case, well, guess what? The dollar price of Bitcoin tends to go up. Bitcoin will tend to go up in a high inflation environment. And so, in that situation, we think the long-term impact on Bitcoin is actually positive. There's a great discussion on Twitter or X between James Lavish and Peruvian Bull last week, where I think they did a great job pointing that out. So for any of you who find this kind of macro analysis confusing and saying, wait a minute, you're saying it'll go down and then it'll go up, and I don't, the 10-year, this and that. If any of you find this confusing, we can sum it up really easily. Hold. There you go. Just hold your Bitcoin. Don't check the price every hour like I do. I'm a little embarrassed. I check the price every hour. You don't have to. Just hold it. Be a long-term guy in this, or long-term person in this, and you're going to be fine. That's the direction that we